Hello and welcome. You're watching Closing Trades with me, Somit Sarkar, and my co-anchor Shrishti Sharma. Well, after seeing some smart gains in the first half of the trade, we are again back in red, Shrishti.
Well, certainly quite a volatile day coming in for Somit, but yes, indeed, in the first half there was some respite for all the bulls out there. But for now, we are once again drifted back into the red territory. Nifty is down about 20 odd points, while the Nifty Bank did spend the most of the time in today's trading session in the red only, and that's 33 points of cut is what we are seeing on the banking index. But we can't complain much in today's trading session because it's the broader market space that is supporting quite well. Because if you see the mid-cap index, that is trading at the day's highest point. But let's also talk about some of the movers then. So it's Bajaj group of companies, be it Bajaj Finance, that is leading the charts with a gain of more than 5%, holding on to the gains in today's trading session. Apart from that, even Bajaj Auto is up around 2.5%. Tech Mahindra, Bajaj Finserv and Tata Consumers are some of the counters that are seeing good day. But on the flip side, that's M&M once again from the auto pack, and what we are seeing that the whole auto pack is seen to be under pressure, and M&M once again seeing a decline of over 2%. NTPC, Eicher Motors, Sun Pharma are some of the draggers in trade right now. But indeed, it's a day of the IT earnings, and on the back of the good earnings and commentary, Coforge and Persistent System from the F&O space have seen a gain of over 10%. So a lot of counters, Somits, that are seeing good gains in today's trading session, but believe that while we can't say much on the index level, but a lot of stock specific action.
Well, there's a lot of stock-specific action and a few stocks that we should keep an eye out for. Firstly, it's Persistent, as you were mentioning. It's up around 10% and this is on the back of a strong set of numbers that the company had reported. In fact, it was a strong set of numbers on all front, be it revenue, be it the deal wins, and be it the margins. Now, if you look at the revenue on a sequential basis, the constant currency revenue was around 5.1%, which is nearly 100 basis points higher than what the consensus was estimating for the second quarter. If you look at the deal win number, they were also strong at around $529 million US, and nearly 74% of this was a new deal win for the company. So a kind of positive commentary also coming in. The management also said that the high-tech segment would recover in the next 1 to 2 quarters, and they are seeing a continuous recovery when it comes to the BFSI segment. Apart from that, if you look at the company's margins, they were flat on a sequential basis, but this is despite the fact that the company had taken a wage hike, and the wage hike impact was close to 210 basis points. So a strong set of numbers coming in for Persistent. Similarly, KPIT also reported a strong set of numbers. If you look at the US dollar revenue growth, that was around 5% odd on a sequential basis. Apart from that, the EBITDA margins of the company came in at around 20.8%, which was higher than what the street was estimating. PAT was also pretty much stable. Deal wins announced by the company was close to $207 million US, and apart from that, vertical wise also we have seen a strong set of growth coming in for KPIT. And lastly, if you look at Bajaj Finance, well, yes, the numbers were kind of weak when compared with the street estimates, but given the fact that we had seen a sharp fall in the share prices before the numbers had come in, this was pretty much factored in. Also, the management in its commentary had said that FY25 numbers would be FY25 the credit cost would bottom out, and from FY26 they're expecting the credit cost to come down, and that could have led the stock higher in today's trade. So a lot of action we are seeing on the stock front. Bajaj Finance, Persistent, KPIT are something that we should keep an eye out for.
Alright, so we do have our eyes for all of these stocks and why these stocks are moving. Thank you so much for explaining. But with this, let's move on and let's connect with our technical experts on the show today. And let me welcome Kunal Bothra as well as Naresh Mirani, who are here with us. And Kunal, let me come to you first to have your take on the index level. Once again, we have slipped below that 24,500 mark. Do you believe that there could be some more weakness that could be in for the markets?
Well, flat day is a good day for the index, especially after the last 5-7 days of the sharp correction which we've seen. Now, the good part about the market today is the net market breadth, because I think after 7 or 8 consecutive days of the net market breadth being extremely negative, we are at a point where the net market breadth, which means that the advances minus the declines, they are on the positive side. That indicates that it's a recovery across the mid caps, small caps, and the tier 2 names from the larger cap stocks. That, I believe, is the texture of the markets today. Index would remain under pressure for some more time, because I think where the selling has been from the FIIs, we are looking at the index remaining under a bit of pressure. But even if we have these bouts of relief rally from the stock specific front, I think even that could probably improve the texture of the markets going forward, at least from a very, very short term play. So I think the strategy has to be dual from current levels. Traders could look at buying stocks which are maybe oversold and then looking out for a bounce or a reasonable rally into these names. And on the index side, we would probably expect that till the time we don't break above the 24,750 mark, the buyers could be on the downside for the indices.
And Nuresh, it has been clearly a tale of two halves for the market. In the first half, we saw a smart 150 points recovery from day's low, and again from 24,600 level, we have seen a 150 points drop. So how are you reading into this?
So this has been the case for the last few sessions. Any recovery in the early part of the day has been sold into. But what is interesting today is the fact that the broader markets have done well. They've recovered 1.5%, 2% across the board. Now, another case is the fact that even though the Nifty has broken below 24,700, come to 24,400, 500, the small cap and the mid cap indices have come closer to the July-August lows, which were equivalent to the 24,000 mark of Nifty as such. So overall, from important support levels, we are seeing some recovery in the mid cap and the small cap indices. Now, only when we start sustaining 24,700, 800 can we call it a reversal. So for now, the range remains the risk of 24,000, 24,200 on the Nifty and 24,800 as the upper band. In this range, till the time we could continue to see stock-specific price action. And the flows continue to be one of the highest in terms of net absolute value. So the FI selling figure is the highest we've seen in a very long time, or rather a new high in absolute terms, not so in percentage of market cap terms.
All right, so that's the take from both of our experts on the index front. But with this, let's also welcome Gurmeet Chadda, Managing Partner and Fund Manager at Complete Circle Consultants. And Gurmeet, very good afternoon and thank you so much for your time. First of all, Gurmeet, help us with your take on the markets at this juncture, because it's been a decent sell-off from the high point. But any area where you are finding the valuations to be attractive or good opportunities at this price point? And also, Gurmeet, help us with your take specifically on the PSUs, because they have been feeling the heat in quite a fashion now. And do you believe that the PSUs have some headroom for some recovery?
So, on markets, I think, Nuresh was right. I think, in absolute terms, this is a lot of selling. I think nobody really anticipated this kind of selling coming through, and in a matter of few weeks. So it's almost $12-13 billion gone. Whenever you will have that kind of selling, I think market has still, in my view, absorbed quite a bit of it. I think so that the multiple reasons for it, started with China's stimulus. Then I think probably the world knows that there'll be some more escalation with Israel. Probably will launch a bigger attack on Iran. And also there is US elections in 2 weeks from now. And there could be some, cash and dry powder be built back. So multiple factors there. But, most of these factors, are there because the valuations are stressed in few pockets. And that's why the reaction you are seeing is a little more in pockets where earnings are weak. And that is why, so whenever there are good numbers, market is rewarding. Even slightly better numbers like Bajaj did post a slightly decent set. SGFC was a little decent. So market rewarded that. And any poor set of numbers, I think the stocks are getting hammered. I think it's going to stay like that. So the stance on recovery has to be where there is earning support, because the markets are still not as cheap as that you can do basket buying. We like financials. We have been dipping into it. We have bought ICICI amongst large cap. We've added to SBI. In tier 2 banks, we've added Federal Bank. We are also looking at some good select NBFCs, something like Uto Capital, which is into only MSME lending. They crossed 10,000 crore a year, and they have done a fundraise and they trade below book. Good metrics. Then we are adding few defense names where we have seen a 20-30% correction from the peak. Adding some auto ancillary stocks, they've been under a lot of pressure. And even the OEMs, if you see from the peak, Tata Motors is down 25%, M&M is corrected 15-20%. So we are adding some of that. In PSUs, we are more gung-ho, as I said, on PSU banks. SBI trades at book. Bank of Baroda came up with a very good update. You will see treasury gains coming through this quarter. The 10-year bonds have softened. Also in Bank of Baroda, the retail mix is improving. The dependence on wholesale budgets, the overseas loan book, the stress points in the balance sheets are improving. So, and I think there is valuation cover. In fact, the entire bank Nifty probably could trade at about 14, 15 times versus let's say 21 times of Nifty. So I think that offers good risk reward from a medium term perspective.
Right, Gurmeet. I agree when you say that the valuations are stretched, but that is much more specific when it comes to the mid cap and the small cap space. When you look at the large cap specifically, even the Nifty's 12-month forward price to earnings, if you look at it, it's very much near to its 5-year average. And large cap is one space where valuations are not actually stretched. So why is it that we are still continue to see selling when it comes to the large cap space? Specifically, we can also see Reliance Industries for that matter. It has come down from 3,200 to now 2,700.
No, so largely whenever you see an ETF and passive selling, it doesn't look at the price. And Reliance is the largest weight of the index post HDFC. Almost both of them put together are 20%. So when we look at the consolidated earnings, yes, it looks reasonable at about 80, 90 times, but the growth of earnings, which now is coming, doesn't look to be in double digit unless you have banks really doing the heavy lifting. And currently I think the template is looking like more high single digit EPS growth. Then even 18, 19 times looks a little stretched. But as I said, this is selling. And when you have basket selling, it doesn't apply logic or valuation. By the same logic, S&P 500 is 27 times earnings, 28 times earnings, and it's trading at a high. So I think flows in the near time might cloud your judgment. But I'm of the opinion that when large part of the correction is due to non-India reasons, some part of it is due to valuation, the bounce back also will be very, very quick. And that is why it is important to dip into places where you see near visibility of earnings. Secondly, I think the corporate balance sheets are deleveraged. Our macro is pretty good. And despite all this, we technically not seen a 10% correction for a very long time. I think despite all this, YTD Nifty is up 12-13%. 1-year return is still 18-20%. So I think some corrections are normal. It's just that we haven't seen some, and that's why this is looking a little more unnerving. Every correction is unnerving, but this one is because it's happened very sharply. It's looking a little more unnerving.
Well, flashing onto your screen is the SBI Life numbers. The net profit has come in at close to 530 crore rupees. The street estimates were close to 730, and the net premium income number is close to 20,270 odd crore rupees. The stock has declined from its day's high. So need to keep an eye out for this number. We'll get in more details for that. Till then, let's slip into a short break.
Welcome back. Well, the regional industry conclave is currently underway in Madhya Pradesh. Let's go across and listen into what the chief guest of the event, Mohan Yadav, the chief minister of Madhya Pradesh, has to say about investment opportunities in the state.
ये श्रीमती शिवानी जैन, इनकी तरफ से कोई है क्या? अच्छा, वो बहन है हमारी. जोरदार अभिनंदन करो हमारी बहन के लिए.
नमस्कार मुख्यमंत्री.
नमस्कार. काय की इंडस्ट्री लगने वाली है आपकी?
हमारी आयरन प्रोफाइल इंडस्ट्री है जो कलब्रुम आयरन इंडस्ट्री है.
जोरदार अभिनंदन करो हमारी बहन की. नई आज शुरुआत हुई है. एक बार पूरा प्रदेश आपको स्वागत कर रहा है. जोरदार ताली बजा करके मैं पूरे सागर के सभी मित्रों का अभिनंदन करता हूं और उम्मीद करता हूं अगली मीटिंग हमारी जब शहडोल में होगी या नर्मदापुरम में, कहाँ अगली कौन सी जगह? नर्मदापुरम में. तो फिर आप और बचे हुए इंडस्ट्रियों के लिए वहां भी शुरुआत करके मिलेंगे. आप मेरी शुभकामनाएं. बहुत बहुत धन्यवाद. मझगावा सतना
सर, वो प्रमोटर यहीं पे हैं सर, अगर मेरी बात सुन.
कहाँ है?
श्री निपुण जैन साहब.
अरे बहुत बढ़िया. चलो यही ताली बजाओ इनके लिए भैया.
माइक इनको दे दें अगर
माइक है आपके पास. लिए माइक मेरे ही देना पड़ेगा क्या? चलिए चलिए कोई बात नहीं, आ जाएगा माइक, आ जाएगा. ये बोले
नहीं, वो पहुंच गए.
लीजिए लीजिए. बहुत अच्छा. आप सबका अभिनंदन जो यहाँ से जुड़े हुए थे. मैं सभी मित्रों को बधाई देता हूँ. जरा हमारे मझगावा जिला सतना गणेश सिंह जी है क्या यहाँ? बहुत अच्छा. प्रतिमा जी भी है. सतना वाले जनप्रतिनिधि कौन कौन है? जरा हाथ खड़े करो. पूरे रिवांचल वाले हाथ उठा लो अपने. बढ़िया, खूब बढ़िया. जोरदार ताली बजाओ. क्या बनाने वाले निपुण जी?
सर इथेनॉल. सर
इथेनॉल.
यस सर.
अच्छा, क्या मक्का लगाओगे कि चावल? क्या है
सर? मक्का सर, मक्का और चावल दोनों सर.
दोनों?
यस सर.
जोरदार अभिनंदन करो. कितने का निवेश है आपका?
सर 100 करोड़ कर चुके हैं सर, 100 करोड़ दोबारा कर रहे हैं सर.
वाह, बहुत अच्छा, बहुत अच्छा. बहुत बधाई आपको. मैं आज के इस अवसर पर आपको भी बधाई देता हूं. उम्मीद करता हूं कि ये जो क्रम हमारा जारी रहेगा. अब सिरमौर रीवा अपने में से कौन कौन मौजूद है?
ये सर
राजीव खन्ना जी।
ऑडिटोरियम में ही मौजूद हैं सर।
राजीव खन्ना जी, वाह राजीव जी, आपको बधाई। राजीव खन्ना जी, आप लगभग 150 करोड़ का निवेश कितना अपना
11 करोड़ का सर।
11 करोड़ का, कोई बात नहीं, जोरदार ताली बजा रहा है हमारे खन्ना जी के लिए। और ये फूड इंडस्ट्री, सोहम एग्रो इंडस्ट्री किधर है?
श्री विभू सूरी साहब।
सूरी जी, चलिए सूरी जी के लिए जोरदार ताली बजाओ भैया, आज ही इन्हें शिलान्यास कर रहे हैं। माया इंडस्ट्री फूड की, ये भी राहुल नंदवानी जी आए क्या? राहुल जी,
राहुल जी हैं यहाँ पे, राहुल नंदवानी जी।
ताली बजा दो जोरदार, इनने भी, इनका भी आज शुभारंभ हो रहा है। एकांश कृष्णानी जी, जोरदार बधाई, जोरदार तालियां एकांश जी के लिए भी। आप भी फूड इंडस्ट्री पे काम कर रहे हैं। हरिओम इंफ्रा इनकी कंपनी का नाम है। उत्कर्ष पटेल, कहाँ है उत्कर्ष? जोरदार ताली बजा भैया उत्कर्ष के लिए। आप उत्कर्ष पे पहुंचो, आप भी फूड प्रोसेसिंग का काम करेंगे। मेसर्स KDS 0V पाइप इंडस्ट्री, पुष्पेंद्र तिवारी जी, तिवारी जी किधर है?
पुष्पेंद्र तिवारी जी हैं क्या यहाँ पे?
अब आपने जगह ही नहीं रखी आने की, बैठे की, कहाँ बैठे आदमी? इंडस्ट्री लगाने वाले बाहर खड़े, इससे बड़ा क्या और सफलता होगी। जोरदार ताली बजा आपने।
AK जोशी जी हैं।
ये ऐसा दौर भी देखना चाहिए अपने को, फैक्ट्री लगाने वाले ही बाहर है। श्री AK जोशी जी कहाँ है? AK जोशी जी वो उधर है, जोरदार ताली बजा भाई। AK जोशी जी, महावीर कोल रिसोर्सेस प्राइवेट लिमिटेड, आप माइनिंग के सेक्टर में काम करेंगे। लगभग 100 करोड़ का निवेश करेंगे। जोरदार ताली बजा भाई। जरा माइक दो तो जरा, कहाँ यहीं के रहने वाले जोशी जी? हाँ, कटनी, बहुत अच्छा है, आपका अभिनंदन है। हमारे यहाँ ऐसे निवेशक मिल रहे हैं, बड़ा काम कर रहा है, अच्छा, बहुत अच्छा, अभिनंदन। दिनेश चौरसिया जी कहाँ हैं? दिनेश चौरसिया जी, इनको भी जगह नहीं मिली, कोई बात नहीं, जोरदार ताली बजाओ इनके लिए भी। ये भी पशु आहार की इंडस्ट्री लगा रहे हैं।
Well, as far as the market mood is concerned right now, let's take a look at whether we are holding on to gains or whether we have given up. We have given up. There was some profit booking that happened at the higher level. So we are back around the 24,450 mark. In fact, headed towards the lowest point of the trading session. Let's take a look at the Bank Nifty as well. Is it holding out a bit better? While the gains were limited on Nifty Bank, at least the losses have been narrowed as well. So it's been a bit more range bound versus the Nifty, which has seen a bit of a drop. So Nifty Bank hasn't given up, but it was muted in any case to begin with. Mid-cap and small-cap indices will also come up for you on the screen. They were seeing a bit of an outperformance at the start of the trading session. They are holding up in the green, but of course, of the highest points of the day. Quickly taking stock of some of the buzzers there. On the gaining side, you have a lot of names which are in focus right now, partly on account of earnings as well. So, a Deepak Fertilizer will come up for you on the screen, Amber Enterprises, First Source, Coforge, Persistent System, all of these companies doing well, while KPIT is on the back foot. Remember, KPIT maintains its guidance for FY25. They are talking about an 18 to 22% growth with an EBITDA margin of around 20.5% plus thereabouts. But the stock has taken a bit of a tumble because the commentary was weak. The management did highlight that mobility segment is going through pressure across the world. Dipan Mehta also joins us on the show right now. Dipan, this was one of the reasons of outperformance of a stock like KPIT for the last 2 to 3 years, that they were present in a very niche segment, and at that point of time, of course, this entire ADAS theme, EV transition was doing well. Now with headwinds coming in the mobility segment in Europe, do you expect a sharp reversal of sorts for the likes of KPIT, etc.?
Good afternoon and thank you for having me on your show. Yeah, I think you have to temper expectations from KPIT, and it's trading at extremely rich valuations, and base effect also comes into play. And overall, I think that yes, I think this entire EV story, there seems to be some doubts which are rising over there. So I'd be a bit careful in KPIT. At least wouldn't back to make any fresh investments. But existing shareholders are sitting on a lot of profit, so maybe they can ride out this kind of rough volatility for some time. But on the whole, I think that, as I said earlier, that we need to be a bit careful in such stocks which are focused specifically on one particular vertical, and any kind of slowdown in that vertical can certainly impact the profitability.
Okay, point taken. So that's a view coming in on KPIT Tech. If you're making fresh investments, be a bit more cognizant of what's happening. What about fresh investments in Paytm now? Because a lot of people were saying that perhaps wait for the event to play out. Now we do have that NPCI approval coming in. Would you be a buyer now, or it's run up already, $750 a piece?
No, I think look at the screen over here. It's not looking good at all. And I would like to just reserve any form of buying for the next few weeks. I think we are reaching a tipping point over here. And in the next 3 or 4 trading sessions, if the market doesn't recover lost ground, then we may be in for a deeper correction. That is what it appears to me. Also, this earnings season is turning out to be a very big disappointment. And there are very few winners, but a whole host of large cap companies, mid cap companies have started to disappoint. So I can see the sentiment getting sour, at least in the short to medium term. So from that point of view, I'm going to be a bit careful and avoid any purchases at this point of time.
India's largest IPO listed on the stock exchanges yesterday. Multiple brokerages have come out with initiating notes on Hyundai. Nearly 6 of them, out of which 5 have a buy rating, while 1 has a reduced rating. And we have Srishti joining us with all those details. Well, among the sell ratings, it's MK which has a sell rating, and among the buys, it's Nomura, Macquarie, Ambit, Damcap. Everyone has a buy rating, and the target price are more than 2000 plus, but the stock is still struggling when we see to cross even the IPO price of 1960.
Yeah, because there are headwinds that people are worried about. For instance, I was reading that note from MK, which has a reduced rating, and they are talking about how royalty is one of the challenges. There's going to be high, lower treasury income from here on. The capacity is something which is slow to ramp up. Plus, the kind of launches that they have are much less than the peers, and that's why they had a bit of a worry around it. But I think we can take it across to Srishti to get more details on this one.
Well, certainly not a great listing for Hyundai Motors, which was one of the biggest IPOs in the Indian markets. Just on the first day itself, we did see the stock tanking 8%. And for now, there are a lot of these key concerns that these analysts are highlighting. First up is the increase in the royalty payment. They have been fearing that from 3.5%, there could be some increase. But the management did come out with a commentary, but was not taken that very well, because the margin contraction in the while back was also seen to be done on the back of the higher royalty. Other than that, this particular IPO was a complete OFS. No fresh capital was coming into Hyundai Motors India, which was indeed not making this particular IPO that much attractive. And there's always a key talking point of Hyundai versus Kia conflict of interest, because Hyundai parent company does hold some stake in Kia Motors as well. So in the Indian markets, where both these players are present with a good market share, there will be some conflict of interest in terms of their strategy as well as sales growth. Other than that, at the time when Hyundai Motors IPO did hit the markets, we were experiencing a slowdown in the passenger vehicle space, as well as overall there were some inventory issues. So all these factors did build in at the time when IPO did hit, and the IPO was not seen to be performing that very well and still trading below its issue price of 1960. While majority of the brokerages are having buy rating or a positive stance on Hyundai Motors IPO, but it's MK that has gone ahead and maintained its reduced rating with a target price of 1750 rupees. They are saying that there is high valuation amid muted growth outlook. There could be a lackluster 5% EPS CAGR over FY24 and 27. The lack of new major launches in the next 12 to 18 months are not giving that much of confidence, as well as some of the capacity expansion plans that the company wants to take its capacity output to 1.1 million units in the times ahead is way lesser than what these peers, and especially Maruti Suzuki, is looking to almost doubling down its capacity by 2030, as well as if we talk about the high royalty and as low treasury income are likely to restrict the EPS growth. So on the back of all these factors, believe that they did weigh heavy on Hyundai Motors IPO. Back to you.
Well, thank you, Srishti, for giving us all those details. Dipen, how is the Hyundai listing looking, Hyundai stock looking to you? This is still down around 50 rupees from its IPO price of 1960. The street seems to be quite bullish on the long-term prospects.
Fine, but as I said, overall market trends and what is happening in the auto industry, also we are seeing inventory pile up, increased discounting, and the kind of waiting lists which were there, they seem to have dissipated. Also, in terms of new model launches, entire industry and Hyundai also are going a bit slower. And a lot of new launches came through post-COVID, and that caused a lot of excitement and it generated a lot of volumes. but now that trend also seems to be, I would say, stagnating. So I would be a bit cautious in Hyundai as well. It's not that it's extremely attractively valued, it's reasonably valued compared to Maruti. And Maruti, mind you, has got a long listing history and a fabulous track record as well. So, paying a higher premium for Hyundai, one needs to think twice. So I would say that just wait and watch. I think entire auto industry, 2-3 quarters, you need to be a bit careful. Volumes may be under stress, as we have seen. Monthly sales figures have been a bit disappointing, and that'll start to reflect in the top line, bottom line, at the quarterly results time as well. So just wait and watch. Maybe you can see a further correction in Hyundai.
Likely, as far as Hyundai is concerned, so don't be in a hurry to buy that out. That's the view coming in from Dipan. On that note, we are taking a short break. Don't go anywhere, gentlemen. We'll come back to you after this short break and carry forward a discussion on the markets.
Welcome back. Dipin, how's Reliance Industries looking like as a stock? From 3,200 it has fallen below 2,700. These levels were back seen in 2023. The stock is trading below all its key DMA. Don't you think that all the negatives must be pretty much priced in right now?
No, I mean, it may appear to be so after such a correction, but what is the trigger to buy? That's the key question. And still, I think management needs to disclose its strategy, how it's unlocking value. Right now, you're buying 3 businesses bundled up into one. All the 3 businesses are large size. They have different dynamics and different investor appetite as well. And yet, you cannot buy into any of them on an individual basis. So the key event for me is, how is the unlocking going to take place? If it is going to be a pure play IPO, then holding company discounts will start coming into play. If it's a split in the company, then that will certainly unlock a lot of value for minority shareholders. Whichever way the event goes, I think you may see a 10-15% type of a move. If it's just a pure IPO, then maybe 10% correction can still take place from here because of holding company discount. If it's a split of the company, then you could see a 10-15% upside because then investors, especially minority shareholders, will get shares of the other 2 unlisted companies, that's retail and Geo. And that certainly will be a great value unlocking opportunity. On a fundamental basis, this quarter numbers are very disappointing, with oil to chemicals and retail not doing as well. So I would be a bit cautious in Reliance at this point of time.
Cautious on Reliance, but numbers for TVS Motors hitting the screen, and overall profitability on a standalone basis has come in at 662 crores, bang in line with our expectation of 670 crore. If you look at the top line, that is a bit of a miss coming in because the actual revenue from operations on a standalone basis has come in at 9,228, and that compares with our expectation of above 9,500 crore rupees. So while the profitability is in line, there is a bit of a miss coming in as far as revenue is concerned. I don't see a major, exceptional item per se. So it's not that the profit has been driven by exceptional or the other income. That's pretty much status quo. But overall, tax expenses have also gone up, and despite that, the company has managed to maintain the profitability. Makes you believe that there might be a bit of a boost coming in from the operating performance of the company, and we'll try and get more details on that one. But for now, TVS a bit mixed, and there's a big red bar emerging on that one. Maybe the top line misses something that the street is kind of looking at, while the profitability looks okay, in line with expectations. Kunal, any first thoughts as far as TVS Motors charts is concerned from the two-wheeler space? Is this something that you would look at positively?
Well, I think at 2,500, if it dips down maybe another 70-80 points, then I think it could be a good buy, because what it looks like that many of these auto stocks are going through their mean reversion or a mean retracement process. So I think in that sense, maybe TVS Motors could become an attractive buy. The stock from 2950, I think would probably complete a 10 to 12% correction. So I think closer to 2,500 or slightly below those levels is where I would believe it could become an attractive buy.
The margin figure is also there as per the company's presentation. It's coming at 11.7%, which is actually not bad because we were working with an expectation of around 11.4%. So they've actually managed to beat that, and that I believe is the beat coming in on the profitability front as well. The company records highest ever quarterly ICE and EV sales of 12.3 lakh units, registering a growth of 14% on a year-on-year basis, and the revenue, as I talked about, 9,228 crores coming in on the top line, and overall it does look like it's not a very bad set that we have at our hands. We'll see why the stock is reacting a bit more negatively. At least at the moment it's down in the trading session. But Dipan, do you have any thoughts on TVS Motors?
I am surprised at the move. First, the disclosure, we and our clients are invested. So one needs to go a bit deeper. I think a 5% correction is what I'm seeing on your screen. So maybe there's something more in terms of what the actual figures are. And although it may have met the profit expectations, I think the miss on the revenues is certainly disconcerting. And then let's look at what the management commentary is, because I thought Bajaj Auto's management commentary was a little bit tepid. So this is what the pattern we are seeing across the board, where numbers are disappointing big time. And we are seeing correction in stocks post numbers. So which is the primary reason why I'm a bit bearish. So let's just wait and watch and see how this earnings season unfolds.
The commentary and additional sense coming in that the company says during the quarter, company has launched the all-new TVS Jupiter 110, and that's something that is working out well for them, and they're seeing it's receiving very good response from the consumers. And of course, they've given out the sales data in terms of volumes, but that is something that we already had. Overall, I think the revenue has missed the expectation by a good 300 odd crores, though margin has been 11.7%, and that compares with 11% in last quarter. So I think margin is something which looks okay. Profitability is in line, but I think I'm not sure if there is any one-off or any valuation gain, because they say PBT for the quarter includes fair valuation gain of 23 crores as again 38 crores of last quarter. So again, that shouldn't be a big driver, but clearly the market is not taking it well right now.
Yes, the margin seems to be the only positive coming out from the numbers, and valuations is also a concern when it comes to the two-wheeler space, and hence we are seeing such kind of a downtick when it comes to TVS Motor. But we'll still watch out for what the commentary comes in from the analyst call, and might the stock recover the next day post the analyst call. Moving on, if you look at the mid-cap IT space, that is one space that has been buzzing in trade. It's persistent. It has been Coforge that has been gaining more than 10%. Dipen, do you think that the allocation when it comes to the IT sector is now moving from large cap to the mid-cap space because of the more positive results coming in from the mid-cap companies like Coforge, Persistence, Emphasis also came out with a good set of numbers?
Yeah, absolutely. I think this is not a recent trend. I think we have seen for many quarters that mid-cap IT has outperformed phenomenally over large cap IT. It's reflected in the stock returns, it's reflected in the P multiple. And this is something, a phenomena of the last 2-3 years, because in the past, whenever there was a bull run in the IT stocks, it was led by the large cap IT stocks. They traded at a premium. Their performance also was better than a whole host of mid-cap IT companies. But this is a clear reversal. And I think it is here to stay, because mid-cap IT companies are still able to find those opportunities. Small $20-30 million contracts make a huge difference. Also, they have developed certain very strong competitive advantages in the verticals or the technologies which they are focused on. And from that point of view, they are able to take on the large cap IT stocks in the market pretty well. So I would say that the best way to play software has to be through mid-cap IT. The list may keep on changing depending upon which company is doing well, which vertical is doing well, what the order position is. But by and large, I think I would say avoid the large cap IT and buy a basket of mid-cap IT stocks that may do even better.
Let's see, the mid-cap IT is likely to do better, but staying with the subject of the two-wheeler sector, because that's the big talking point right now. For what it's worth, TVS Motors has recovered a bit. No, actually, it's still down 6%. There was a bit of a recovery, and I think that got sold into yet again. So there is that weakness coming in as far as TVS Motors is concerned. Maybe we should pull up that stock price as well, because that will tell you that's down 6%. But staying with the two-wheeler major, Hero MotoCorp is all set to add 2 new motorcycles to its portfolio, while the first one will be a 210cc X-Pulse. The other one is expected to be a 250cc bike. My colleague Sumit Chaturvedi joins us with the exclusive details of these expansions and the new launches which are lined up.
Well, Indian auto major Hero MotoCorp has big plans for the coming few months. It's going to unveil 2 new bikes in November. The first is 210cc X-Pulse adventure tourer bike. Second is 250cc. So it can be Charisma or some other platform, but yes, it's confirmed that these 2 bikes will be unveiled next month and will be launched thereafter. Hero Moto wants to increase its presence in non-commuter segment. It is definitely a big player in commuter segment, and non-commuter segment is something which it wants to expand its operations in, and that's why it's going to showcase these bikes and launch operations. In September, Hero Moto's sales have jumped 19% owing to good festival demand. We're learning from sources company is also planning to expand in 2 to 3 new European market that will be announced also very soon. So considering India's two-wheeler market growing, India's market's outlook and India's market potential, companies launching all these new products in the coming few months.
Well, thank you for joining us and giving us all those details. Capital goods stocks are down today. ABB and Siemens, if you look at trade, it's down around 5 odd percent. BHL is also down 4%. One of the news was that L&T is one of the front runner when it comes to some power equipment. Do you think the competitive intensity when it comes to the power equipment space will increase with L&T's now entry, and we are seeing such kind of negative move coming in for ABB, Siemens and BHL. In fact, BHL used to have 100% market share when it comes to the power equipment sector, and with L&T's entry now the competitive intensity might increase further?
There's always competition, and thankfully the Chinese competition seem to have reduced. Otherwise, there's always been competition within India. The likes of Siemens, ABB, I think they have moved on and they are focusing on niche products, high value-added products, and they want to get the right projects and where there are adequate margins, and there are enough opportunities from them as well, looking at exports also. And L&T, I think, is just going from strength to strength. But I think that the order book position is not as strong as it was a few quarters ago, purely because of elections, and therefore the ordering has been a bit slow. And again, I think base effect, valuations, keeping all of that in mind, you need to be a bit careful. Maybe L&T looks good at a correction because of its size, because of its order book position, because of the value of the subsidiaries. But the likes of ABB, Siemens, I'd be a bit cautious.
That's the take coming in. Yes, there has always been competition, but let's see which way this goes. HUL, that's the FMCG major, which is expected to report its numbers anytime over the course of next couple of hours. And for what it's worth, so far the numbers haven't been that impressive from the FMCG sector. Let me ask Snehi as to what the street is penciling in for this one. Snehi, is HUL going to be any better than the rest of the peers? It's going to be another muted set.
So from HUL also this time around we are expecting a flat set of numbers as well. If you take a look at these numbers on a standalone year-on-year basis, revenue is expected to come in at 15,792 crores compared to 15,276 crores this time last year, which is just an uptick of 3.4% on a year-on-year basis. EBITDA is also expected to only grow by 1% this time, 3,730 crores compared to 3,694 crores this time last year. However, we are expecting to rather see some pressure on PAT this time around, because net profit is expected to come in at 2,657 crores compared to 2,717 crores, which is down 2.2% on a year-on-year basis. And also EBITDA margins are expected to see some contraction this time, coming in at just 23.8% compared to 24.6% this time last year. Now the major reason for this is EBITDA margin is expected to compress due to the one-off item, remember, which is the input tax reversal in the base quarter, lower other operating income, higher ad spends, commodity inflation and increase in royalty fees to the parent Unilever. All of these reasons are expected to build on some pressure on PAT and EBITDA margins this time around. But if you take a look at the overall business, volume growth is expected to grow 5% year-on-year. Segmentally, health, food, drinks segment is continued to remain weak, but home care segment is expected to grow at 5.3% year-on-year. Beauty and personal care 3% like-for-like growth is what we are penciling in. Food and refreshments is expected to grow 4.5%. And however, on the flip side, the other income part, we are expecting a 35% decline year-on-year coming in due to the discontinuation of the GSK OTC distribution business in November 2023, which is the base quarter. Now, some key monitorables in these numbers are going to be demand on outlook versus rural and urban consumption, competitive intensity, the outlook on commodity inflation that we are seeing, as well as the pricing action that the company plans to undertake going ahead. But well, yes, a flattish quarter is what we're expecting for HUL this time.
Quarter from HUL today, and ITC will come out with earnings tomorrow. Before I bring in the expectations for that one, Dipan, what's the view on FMCG? We are all talking about a rural recovery, rains being good, election impact and all of that. It's not showing up in the number, and for what it's worth, the festive season hasn't really kick-started.
That's right. I think even FMCG, what Nestle reported was very disappointing, and urban demand is pretty slow. And also, I think a lot of products have reached maturity. I think over the past 15-20 years, a lot of the FMCG companies have gone deeper and deeper into the rural markets. And whatever distribution, expansion, advantage or growth is already, I think, more or less reported in the numbers and priced in. So now it has to be overall growth in the category. And since I think consumption also has reached kind of a plateau, I'd be a bit cautious on FMCG as well. You have to really look for categories which are still where there's still growth. Like look at the way the numbers came from Varun Beverages, a company which we and our clients are invested in. Then there are other companies like BKG, also, where these are niche companies. They are focused on certain segments where there's still growth coming in. And that's where I think investors need to focus on rather than the HULs and the Nestle and the Colgates or the Daburs, where I think the volume growth is low single digit. So there's no way that they can generate that minimum 15% type of a top bottom line growth on a sustainable basis for long term basis for investors to be interested in them. And 15%, I think, is the minimum benchmark that investors should have in terms of adding a new stock to their portfolio. Other than that, I think you're just about trading and not really looking at creating a lot of wealth.
Well, let's also get in Sharad to get details on what can we expect from ITC numbers, which are going to be tomorrow.
Well, yes, one of the largest FMCG companies in India, ITC, is expected to come out with its results. Overall revenue expectations on a standalone basis is over a 9.2% increase on a year-on-year basis, while PAT is expected to come in at more than 5,000 crore rupees, indicating a jump of almost 3.1%. Also, the margins, that is a cause of concern, is expected to come down. It's expected to come in at 35.6% as compared to 36.5% last year. And this margin compression is expected to be there because of a subdued performance in the paperboard business. Also, the overall expectations, the cigarette volume growth expected to come in at almost 3% growth, while the EBIT growth for the cigarette business is expected to be around 5%. The EBIT margin for the cigarette business expected to decline by 150 basis points due to inflation in leaf tobacco and other inputs as well. EBIT margin is partly going to be mitigated through improved mix, cost management and calibrated pricing. When it comes to the FMCG business, it's expected to grow at 6.5%, with EBIT jumping with a margin of almost 8.4%, and the paperboard business is expected to decline 4% on a year-on-year basis. Also, the hotel business is expected to grow at 10% with EBIT margin expectations of 20%. However, the important monitorables for the earnings for ITC would be, of course, the hotel and agri-business outlook, the cigarette volume growth, how it's going out, and what's the commentary right when it comes to the change in BAT's stake in the company, and also the pricing strategy going ahead.
Well, thank you, Sharad, for joining us and giving us all those details. Well, Kunal, going to you, what are the STBT or BTST ideas for today?
Two BTST ideas. The first one is about Tech Mahindra. IT stocks have been a lot more resilient, so expecting this resilience to continue from the IT names. Tech Mahindra is a buy, targets of 1770. Stop loss could now be trailed to 1700 mark. And the second would be about VIP Industries. That stock is also performing quite well. It's come back to that 500 plus levels. So short term wise, look out for 525 as a target. Stop loss at 485 now.
Okay, point taken. So that's a view coming in on VIP Industries as one of the BTSC trades. But what about you, Naresh?
Sell. First is the one ABFRL. The stock has seen a good correction and making a reversal from the support band. Stop loss at 308, target price of 320. Second is a sell on Sun Pharma, which has a short-term breakdown today. And the whole pharma pack looks a little weak. So expecting this to go towards 1800 or lower. Stop loss at 1880.
Point taken. Those are the BTSC trades which are coming in at this point of time. For the market right now continues to be a bit bleak as far as the frontline index is concerned. We gave up the gains and we are firmly in the red right now. Dipan, one space which was outperforming over the course of last 12 to 24 months were the PSU stocks. Do you think it's undone now and it's time to just stay away, or do you expect perhaps there is going to be a bit of a pause and then the rally will resume?
Tier 2 PSU banks have reported very good numbers. And in fact, if you compare them to private sector banks and overall other banks as well, their growth rates, their net interest margins, their NPAs, cost to income ratio, all of those ratios have improved significantly and are more or less in line with the best in class. And at the same time, they don't have this problem of too many consumer loans or personal loans, or for that matter, microfinance, which is going to impact a lot of other banks. So within the PSU space, I see a tier 2 banks a nice trading and investment opportunity as well. Although as a measure of disclosure, we haven't invested in any of them as yet. We're looking at them. They're on our kind of a shopping list. But that's one segment I think which can do very well, right from smaller banks like Bank of Maharashtra, Central Bank of India, Punjab and Sindh Bank. I think all of these IOB came with very good set of numbers. And that I think we'll see outperformance over there, rather than the large private sector banks or even like a PSU behemoth like SBI. So within the PSU space, I think the PSU banks are the other space to focus on.
Pharma sector looking like after a strong up move that we had seen on a YTD basis, do you think that the valuations are now expensive and all the positives like the bottoming out of US price erosions, everything is played out so far for the pharma space?
You should be overweight pharma, and valuations are on the higher side. It's a good place to hide when you have so much of earnings disappointment all around you. And I think because of export market, because of slight improvement in US generic market in terms of competitive intensity, and a whole host of new launches, domestic as well as in US generic market, which a lot of pharma companies are targeting, and better US FDA compliance means that next few quarters will be very, very good for pharma companies, large cap, mid cap. And I think that could be one segment where investors should be overweight in. And that may surprise really on the earnings front as well. So when you're buying a stock, investing, trading, you want to have that kind of comfort that the earnings are coming through thick and strong. And that I think you will see in pharma stocks, and that is what is lacking in a whole host of other sectors.
Point taken. So that's a view coming in on the pharma sector. But as we were talking about earlier, it's of course the Madhya Pradesh which is doing one of those regional investor meets. Let's hear out what the Chief Minister has to say.
ये मैं आपको शुभकामना देता हूं, बधाई देता हूं। लोगों के जीवन में दो रोटी की व्यवस्था कर देना, उनके अपने जीवन में उनके कष्ट में खड़े रहना, ये हमारी और आज के दौर में तो यशस्वी प्रधानमंत्री के लिए जोरदार अभिनंदन करो श्रीमान नरेंद्र मोदी जी के लिए। एक व्यक्ति कितने मोर्चे पे काम करता है, कितने प्रकार से काम करते हैं, मैं उनका वंदन करता हूँ, अभिनंदन करता हूँ। ये हमारी डबल इंजन सरकार का परिणाम है। ये जो जितनी हम सब बातें कर पा रहे हैं, ये उनकी अम्ब्रेला के माध्यम से विभिन्न प्रकार के कामों को प्रोत्साहन देने के परिणाम है। मैं अभी विस्तार से बात करूँगा। हमारे एमएसएमई मंत्री, हमने अपने मंत्रिमंडल के साथियों के मंत्रिमंडल का विभाग का बंटवारा भी तय किया। जैसे लेबर के मामले में पूरी जानते, ग्रामीण परिवेश की दृष्टि से और विकास के मामले में गांवों के अंदर की कठिनाई के बारे में हमारे ग्रामीण विकास मंत्री सारी बात जानते हैं, इसलिए उनको मंत्री बनाया। हमारी राजेंद्र शुक्ला जी विभागों के संचालन अच्छे से करते हैं, इसलिए दो मंत्रालय को एक करके हेल्थ डिपार्टमेंट उनके साथ दिया। हमारे चेतन कश्यप जी खुद बहुत बड़ी इंडस्ट्री के मालिक हैं, इनको कहा और कितनी अच्छी से उन्होंने बात कही कि बड़ी इंडस्ट्री में बड़ा अमाउंट लगता है लेकिन रोजगार कम लोगों को मिलता है। उन्होंने कहा कि मेरा अनुभव है, इसलिए वो एमएसएमई मतलब छोटी इंडस्ट्री के मंत्री बने, क्योंकि अनुभव है लेकिन इसका लाभ पूरा मिल रहा है। अपनी विधानसभा में लगातार इस प्रकार के कामों को प्रोत्साहन देते हैं। मेरे साथ मंत्री श्रीमती प्रतिमा बागरी जी, जोरदार अभिनंदन करो आपकी अपनी बेटी का। एक और मंत्री राधा सिंह जी, उनका भी अभिनंदन है। इस अवसर पर हमारे वरिष्ठ नेता क्षेत्र के सांसद गणेश सिंह जी, आपका अभिनंदन है। ताली वाली में कंजूसी मत करो। राजेश मिश्रा जी आपके साथ है। हमारे इस मीटिंग में हमारे सीएस अनुराग जैन जी, जिनको बहुत अच्छा अनुभव है, वो भी यहाँ मौजूद है। हमारे सारे वरिष्ठ अधिकारी मौजूद हैं। हमारे बीच में से आचार्य बालकृष्ण अभी गए, लेकिन उनने अपने स्वदेशी का जो आंदोलन चलाया, हमारे दो भाइयों की जोड़ी अलग अलग प्रकार से प्रसिद्ध है, लेकिन रामकृष्ण पतंजलि आश्रम के माध्यम से बालकृष्ण जी, जनार्दन मिश्रा जी के लिए जोरदार। कहाँ जनार्दन जी? वो, अरे वाह, मैं भूल गया मिश्रा जी, आपका मालूम पड़ा आप कब खड़े हो जाते हैं, वहां शुरू कर देते हैं अभी। हमारे भाई है जोरदार, फक्कड़ मुरादाबादी, बहुत अच्छा, आपका भी अभिनंदन है। बहुत अच्छे जनता से जुड़े हुए, जनता के मामलों को लेके चलने वाले यहाँ हमारे सभी माननीय विधायकगण, एक बार जोरदार ताली कर बजाओ। पूरे विंध्य के सभी माननीय जनप्रतिनिधिगण यहाँ से लेके वहाँ तक सारे बैठे हैं। मैं आप सबके लिए भी स्वागत करता हूँ, अभिनंदन करता हूँ। यहाँ हमारे बीच में डालमिया ग्रुप के सीएमडी श्री पुनीत डालमिया जी, आपका वंदन करता हूँ, अभिनंदन करता हूँ। बहुत अच्छे से आपने बात की। श्री भीम सिंह जी कचोड़ जी, HK त्रिपाठी जी, जो रिलायंस बायो से है, अडानी ग्रुप के, रिलायंस भी है, अडानी भी है, पतंजलि भी है, डालमिया भी है, सिद्धार्थ इन्फोट्रेक भी है, डायरेक्टर NCL भी है, CMD रामा ग्रुप भी कौन छोड़ा अपन ने मंच पर भी और नीचे.
Okay, looking back at the market and the kind of setup that we have at our hand, last 1 minute of the trading session, it does feel like where we started off has suddenly turned right now. The Nifty was earlier in the green. Right now, we're ending below the mark 24,450. The advance decline ratio is still favoring the advance, but it's still a bit of a tug of war between the two. Bank Nifty has fared much better than the frontline index, and even the mid-cap and the small-cap indices, though are ending in the green, but they're materially off the highest point of the trading session, and that sell-off is the big news to really talk about in the day-to-day. Talking about various stocks and sectors then, from the frontline index, it was Bajaj Finance doing well. IT as a pack was fairly enthused, so a Tech Mahindra, Persistent, a Coforge, a Zensar, a First Source, all of these stocks were up quite well in the trading session. Bajaj Auto did well, HDFC Bank was in the green. On the back foot, M&M was down, TVS Motors was a result reaction, Eicher Motors too was coming under pressure. Some of these capital good companies were coming under pressure, so pull up an ABB, a Siemens, a BHEL, or even Cummins for that matter. All of these stocks end in the red with a cut of anywhere between 4 to 5%. M&M Financial, downgrade coming in for the guidance, downgrade coming in from a couple of brokerages. That stock goes home with a cut of around 5%. KPIT Tech failed to infuse the market with its margin performance, and the commentary on mobility segment was a bit sluggish, so that stock was under pressure. On the gaining side, however, Amber Enterprises did fairly well. Deepak Fertilizer goes home with a gain of around 15%. You also have PNB Housing doing well. Paytm reacting to that news flow of the NPCI approval coming in. And then Varun Beverages, what a stock it has been for the last couple of days. Yesterday, when rest of the market was down and out, Varun Beverages was up 4%, and today there's a 6% rally coming in on Varun Beverages, and that's how we are ending the day. So overall, a mixed trading session coming in for the Indian markets. Let's hope tomorrow is better.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.